Good evening, all. You're all very welcome to our weekly market outlook for the week ahead. Of course, factoring in the price action from Friday's close, looking at the opening price action in the markets this week, and of course, reconciling the volatility after Friday's NFP. So, of course, for those of you who are following in our group on Discord, on Friday, we talked about the economic data, we talked about the different banking forecasts, and of course, broadly speaking, the NFP data from a payroll perspective actually came out pretty solid with 263,000 jobs. So 263 was the actual figure, 200,000, the revised lower figure over recent weeks, obviously being shown to be beaten. And of course, the tick up in average early earnings, which is wage inflation, was also a very, very keen contributor to market volatility this week. So, of course, as our attention turns to, obviously, this week, we've got about 3 weeks more of what you would call pronounced volatility, really until about the 16th or 18th of December. And then once we kind of get us through all of the December economic data, you would expect that fairly consolidated move into year end as well. So I suppose today, looking at the broader markets, we did have European retail sales figures, which came out less than expected. We did have ISMs and PMIs in the US, which again was a little bit mixed. The PMIs did come out, broadly speaking, better than estimated or better than forecasted, but the caveat here is that they're still very much under the 50 level, which of course is that recessionary mandate. So recessionary marker, anything under the PMIs on 50 is recessionary, is contractionary for the economy, and of course anything above that 50 level is expansionary and will have net growth as a consequence. So obviously today there was a little bit of back and forth in the European session, which we'll be reconciling in the markets very, very shortly. And tonight, of course, we do have the RBA interest rate decision. So the last RBA meeting for the year, they're looking for another increase in interest rates from 2.85% to 3.1%. So the RBA are looking for forecasts to increase the interest rates by 25 basis points or 0.25%. So it'll be interesting to see, do they go a little bit more hawkish? Do they actually increase by higher than that? So let's say, for example, if they were to bring it to maybe 3.25 and go 0.4%, that could be a possibility too as well. So that will obviously be seen as hawkish for the Aussie overnight. So of course, 3:30 a.m. local time in the UK will be when this data is coming out. So of course, do reconcile that data with your own economic calendars within the time zones that you're currently trading on. Tomorrow, we're a little bit lighter on the economic data. We do have German factory orders. We do have goods and services trade balances in the US and some US data as well from the PMIs in Canada. But broadly speaking, to attention will be the after effect of today's open. The volatility today, of course, since the post movement after NFP on Friday, and of course then looking of course to the main parts of the week, Wednesday and Thursday this week, we do have a lot more data out, and of course Wednesday morning we will be going through the price action, dissecting it, because of course we do have European GDP figures coming out on Wednesday morning. Of course 2.1%, 0.2% Q on Q. So of course anything better than that will really have to give a little bit more buoyancy to the European, to the euro currency broadly, and of course the European indices as well. So of course we will be doing another market update on Wednesday, just when we reconcile the data on the first couple of days of this week. Wednesday, Thursday, two of the busier days of the week this week, and of course we will be reconciling the price action with the volatility in the markets as well into obviously Friday's weekend. So of course let's look at the data from the back of NFP. Now of course the dollar has seen a little bit of a pickup today, of course, after the sell-off or the continued sell-off over the last week or so. So you saw that gradual assimilation to the downside. Price action was very much kind of in that corrective territory, creating these short-term lower lows, lower highs in the bearish order flow. So you can actually kind of see here, new lows, structured pullback, new lows again, all the way back up to this daily order block. And of course, we're repeating the action again as we've made new lower lows and the price action's pulling back. So if this is to play out, we've got drive one, pullback, drive two with a third drive. So now we're looking to see if there is any sort of bounce in the dollar here, and will the price action ultimately reject this daily order block here at around about 106.50, or will we actually try and see it assimilate a higher degree of movement and of course try to take out this bearish order flow that's been creating into November month end, and of course in the first couple of days of December of this month. So of course we have to reconcile that with the euro dollar and of course the FX markets. And the stronger dollar today on the DXY has very much kind of elevated or kind of made some sort of corrections against those movements that we saw last week as well. So just bear with me a second, folks. My charts are just loading. So if we look at Euro USD first, we can see very, very clearly that on the daily time frame, we had that elevated increase in price action last week after that weaker than expected, obviously, DXY. And of course, that bearish DXY meant that we saw very, very strong progression against the dollar in those FX pairs. Now, of course, when we're looking at it from a cross asset perspective. So, for example, we're looking at it Euro USD. We're also looking at JPY USD. We're looking at USD CAD and USD Yen to therefore give us a greater understanding of the relative strength of the DXY against those major composition weightings, other currencies that it's obviously factored in against. Now, structurally speaking, if we look at the higher time frames, we can see very, very clearly we've had that arching continuation in euro dollar strength. We've talked about this area here around 104, 104.50, up as high as kind of 105. Now, on Friday, we did get that very, very strong close. And today, of course, you'll actually see that the price action came very, very close to and actually touched this area of liquidity from, or this point of interest at 106 very, very early this morning. And of course, if we progress to a lower time frame, like the 4-hour chart, you can actually see that very, very strong grind into the close and, of course, into the London session today. Very, very strong open. And, of course, that price action still tilted back a bit. Now, so where we're currently standing is at this moment in time, yes, from a daily perspective, we are still creating bullish order flow. So you can see that daily top there. We've broken through. We have assimilated that continuation of strength. So now, of course, as the DXY corrects that DXY impulse, how far is this euro dollar pullback going to extend to? And that's really the driver to determine, is this DXY another short-term battle of dollar strength against the bearish trend that's continuing to play out in terms of a weaker dollar, or is it actually something more sustainable? And if it becomes something more sustainable, we need to start taking out the higher lows of this current trend. And of course, we've got lows here stretching it up to as high as 103 before we had that rapid ascension last week. Now, one final point here on USD really is looking at the price action. You can see very, very clearly where we are creating bullish order flow on the 4-hour, because you can see here peak high, pullback, secondary high, another pullback. So would it be completely impossible to see that third wave and then look to see, will this internal price action, the internal break of structure, actually play out in the price action? And I think that's probably what many are actually focusing on at this moment in time, because you can see very, very clearly nice assimilation to the upside with that clear pullback, secondary move, price actions pulling it back again. So even from a shorter term perspective, we're still creating even bullish order flow. So of course, with that perspective, we need to see how does this play out, and of course getting that break of structure, flag back up, and then that change in sentiment, directional bias. So that's obviously something to watch out for this week as the price action develops more broadly. Now, similarly again, exact same scenario with cable. We came up as high as this area here between kind of 122, 123 on Thursday, on Friday, and again kind of similar formation, bullish order flow, higher highs, higher lows, could still continue to play out, and then the markets, of course, above 123 has made new highs. Structurally speaking, from there, markets is obviously very, very choppy now up here in this region. So we've had that kind of intangible continuation to the upside before the price actions come back down. You can actually see here on this one how the price action, even on a 1-hour chart, has technically broken structure here. But of course, let's wait and see, because of course we have higher highs, we do higher low. Could this be misconstrued as a higher time frame equal low? Of course, that could be the case. And then wait and see, does that continue to tick higher? But even now at this moment in time, really worth watching the price action very, very closely. If this is the play out and this is in a break of structure, then of course we're waiting to see, does the price action get one more flag up back into this 122.75 level, and see if there is that correctional sell-off from this zone back into this region down here around 119.50, 120. And I suppose that really becomes the interesting element of consideration into the latter part of the year, and of course the final month of the year as well, broadly speaking. Dollar CAD has continued to correct to the upside. So we talked about this bearish trend, this kind of structured move. We talked about the price action moving higher. We did look at, even last week, the potential for this move into 137. Of course, it did fail around 136.40. But when you look at the price action now, we're creating bullish order flow. You can kind of see that there, higher highs, higher lows, higher highs, higher lows, and the price actions having that run up again. So this area here, 137 into 137.50, is still very much on the radar from a perspective. And of course, then, well, if the dollar does break out and we see that continuation then in dollar strength, that simulation or change in directional bias, then of course we could see potential for price action to come back up into these higher levels, echelon regions up here, and areas of consideration as well. Lastly, then in the FX play is obviously dollar yen. So of course, dollar yen into the early parts of November was creating bearish short flow. So we've got the lower lows, the lower highs. And then of course, last week, you can actually see how the price action last week had a very, very smart liquidated manipulation play, because of course, we had this consolidation. We did temporarily break out, and we had that very, 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 very sharp decline into this area of consolidation down here, this bottom formation around 34. And of course, we are correcting. So of course, similar to what we're kind of looking at in dollar CAD, will the price action get back up into this 138, 138.50 to 139 region? I suppose that's a very, very interesting level to see. Of course, we're creating bearish order flow, lower lows, lower highs, lower lows, short-term high before the price action impulses. Of course, we do even have an area here that is unmitigated, but price action, I think structurally speaking, the area to watch really this week is this area around 139, this 138.75 to 139 level, to see if there is any sort of tangible, clear reaction from this zone. Of course, you could apply that within your trading plan. Gold now is incredibly interesting as well, because of course gold, we talked about these regions over the last weeks, kind of 1790 up as high as 1807, and of course on Thursday and Friday we got a lot of volatility around this 1807. Now, what's actually really got my attention is actually the 15-minute charts, because of course, if you're looking at the 15-minute charts, you can see very, very clearly this was the NFP sell-off on Friday, of course, weaker than expected. So we're creating obviously this bullish order flow into consolidation. Price action comes all the way down, and as such, it has reacted prominently off of this region of interest. Now, not so much the 15, but also even the 1 hour chart as well. You can actually see that reaction, and it's literally bounced off the 1 hour zone here to a T. And of course, we did get that one final impulse, taking the highs, and now the market has rolled over. So of course, structurally for there, then what are we seeing? Well, we're seeing this initial daily level over here come mitigated. So I'm just going to remove that temporarily. And of course, we have that top formation, that reset structure. And of course, the price action is now broken through said structure. So now it just becomes a case of what is the, I suppose, clear reaction, given that the price action has taken out all of this, I suppose, liquidity here. Okay, will we get one kind of final impulse of move back into this 1800 to allow the next wave of selling? Well, of course, that really becomes the big question, because on the 4 hour chart, if you look at it from here, even I suppose the 4 hour giving a little bit more clarity and a little bit more structure, you can actually see that we have that break of structure here, as I said, on the 4 hour around this region of interest. And of course, we have clearly broken through. Okay, we've had that bullish order flow. Okay, we had that massive impulse. The price action continued higher, mitigated this daily zone, and is obviously clearly sold off. So now it becomes a case of, well, is this kind of a 2 to 3 week correctional phase of price action, maybe to see that type of impulse? That really becomes the talking point, because of course, if we look at the price action broadly speaking, we can still see how the market has unmitigated this massive impulse of bullish price action we saw from the 3rd of November. So it wouldn't be completely inconceivable to see this corrective move over the next week or so and go from, let's say, 1770, 1780 all the way back into this kind of 1700 level. I think that becomes a very, very interesting discussion point this week. But me personally, just waiting to see if it can get back up into this region here. So anything above kind of 1795, 98, maybe even as high as 1800 would be ideal, to see if there is that kind of fade off in price action from this zone of interest as well. All right, so that's gold. And lastly, then, as we turn to the indices, we can see the indices continue to react as well. So of course, indices still creating bullish order flow. So higher highs, higher lows into obviously month end. Of course, last week we did get that impulse off of the Powell commentary. He rallied the markets higher again. And since then, the markets have turned south and again are creating that pullback or corrective phase of price action. Now, structurally speaking, as I said last week, this area around 29.25, 29.30 was key. And of course, we did see that very, very strong bounce off it from Wednesday to create new highs. So of course, if we were looking for the S&P and indices strength to really decay and give way, we should be looking for this area to be broken. Of course, then that's simulating that change in structure, change in bullish order flow to potentially bearish order flow, waiting to see if there's order blocks mitigated, and then of course seeing as to that profit taking into year end as there is a potential unwind, maybe potentially back to 36. Now, of course, at this moment in time, that's still very premature because of course we haven't broken through structure. It's only a hypothetical scenario because we do need to see how does the price action react here, as I said, around this 3900 level to see does the price action maintain above this level and keep the trend intact, or is there a change in circumstances developing? And of course, that's going to be the big thing really for the next few days. Right, so that then obviously brings us to the Nasdaq again. So Nasdaq very, very quickly, similar kind of structure in terms of that. Now I just also want to open up my Dow Jones chart. So if you just bear with me a second, folks, we'll open up the Dow Jones as well. And of course, we can evaluate the price action on that one as well before we finish in Europe. So Nasdaq, structurally speaking, is very, very interesting as well. So Nasdaq, we talked about this 12,000 level. We had peak highs at 12,000. We had that massive rally up from 11.5 all the way back up to 12,000. Notice how it took the highs initially on Thursday, and then of course Thursday into Friday consolidated before we had that very, very change of structure developed on Thursday. Now, structurally speaking, on the Nasdaq on Thursday into Friday, we had consolidation. Then, of course, we sold off, off the back of the NFP figure. Very, very clear sell-off from 12,000 all the way back to 11,750. Rallied all the way back up to take the order block liquidity zone from 12,010. Very, very clear sell-off, and the markets is now trying to create bearish order flow. So, of course, then it becomes the case of, well, we've had that massive assimilation into equal highs, which has ultimately failed. The markets have tried to take the Nasdaq higher, and of course, it hasn't succeeded. So what have we seen from then is, well, we've seen that top out, we've seen the short-term break of structure, we've seen the flag back up, and now we're seeing the price action try and turn lower. So now it becomes a case of, is there a new change or a new pattern in price action? And of course, that brings then into the discussion, well, we've got higher highs, we've got a lower low into the retest of the lower high, and then the potential for new lower lows back into this liquidity level from 11.5, which broke out last Wednesday. So that really becomes the kind of the testament to say, well, are we bullish? Are we bearish? We need to be able to separate the wood from the trees, have clarity within the price action, and then be able to make clearly defined decisions off the back of that. But clearly we can see this level hasn't broken through. It has broken down, it has flagged back up. So there is the potential here for bearish order flow. But now it becomes a case of, can we take out these lows under 11,750 to allow for that deeper, shorter term correction again back to 11.5? And of course, dollar strength, the DXY indicator of sentiment should be very, very important to determine the next move. Similarly, again with the Dow Jones, I suppose structurally speaking, if we go to the daily chart for a moment, you can actually see how the daily chart has continued to elevate itself to the upside. Okay, so it's again similar to the other ones. It's creating bullish order flow, higher highs, higher lows, higher highs, higher lows, higher highs again, and we're structurally holding this level here. So from this perspective now, into obviously the course of the week, we're really evaluating the Dow Jones, as I said, off this daily liquidity area here, right? This liquidity area around 33,800. Does the price action hold up? Because of course, if this higher high, higher low scenario here that we're looking at, higher high, higher low, higher high, breaks down, and we see the price action break through 33,800, well then of course that's again initiating a change in bias, change in sentiment, and of course we could very easily see that corrective move back down into some of these levels down here. We've had that massive, very, very clear, tangible move from October into the early parts of December, and now it'll be a case of, well, we've obviously taken the highs of this liquidity. We've still unmitigated this April high from the November movement. And of course, we're waiting to see, is this bullish trend remaining intact, or are we going to break down? Because of course, we have the potential for a nice 2,000-3,000 point sell-off on the Dow Jones way back into some of these levels, 32,000, 31,000, which is of course nearly a 3,000 point sell-off. So it's important to factor that into consideration. From a 4-hour perspective, again, similar enough scenario here. 4-hour, obviously the bearish order flow, or the bullish order flow, still very much intact. Higher highs, higher lows, higher highs, higher lows, higher highs. So of course, if we are to have a change in trend direction, we're really looking for this low to be broken down to create new bearish order flow or lower lows, lower highs. Then obviously waiting for that mitigation of the order liquidity zones, and then of course trying to sell into that more promptly. So that's what I'm kind of looking at this week, factoring in the price action obviously from last week, the volatility regarding NFP, and of course then the sentiment into Wednesday and Thursday of this week. Now of course with obviously the volatility in the US, we also have to look at the FTSE. So the FTSE churned higher quite considerably through October into November, into the early parts of December, and it's come all the way up into this liquidity area here between 7,600 and 7,700. So that was the broader range of interest. Now, structurally speaking, if we look at the 4-hour trend, you can see the trend developing very, very clearly. Higher highs, higher lows, the whole way up, until such a time where the price action has created highs up here. We've come back down to create this short-term bottom here at 75.20 with that reaction today back up into 7,600 again. So creating higher high, creating a higher low. But on this occasion, we haven't continued to churn higher. So that gives me the point of view that, right, if this is the play out and if this is the end or the top in the short-term movements, we've obviously created higher high. We've created a bearish correction of the pullback retracement in the bullish trend, which is obviously the new low. And of course, if the price action is to create this change of dynamic, the trend structure, the movement in out of indices into the safer havens, well, then, of course, we're looking to see, is it time for the FTSE now to give back some of those gains and level out into the end of the year? And of course, if that scenario is to play out, really and truly now we're looking to see new lows to form really from this type of structure. Then, of course, waiting for the mitigation of order blocks, the liquidity moves, and then just trying to play this bearish order flow correctional movement against what's been, again, a very, very bullish six or 8 weeks in the price action where we're constantly creating bullish order flow. And that's really just to watch. If you're going to start selling into some of these trends, you need to be making sure that there's a clear change in the trend direction, making sure it's not just a temporary move, but making sure it's something more substantial and sustainable. Otherwise, you're going to take a trade and it's going to be a short-term movement, and then the original trend is going to come back in, and of course that's going to take you out. So last but not least, then tonight we're going to finish on the DAX. So the DAX in Germany came all the way up to this 4-hour daily zone of liquidity that we've talked about, and of course we're still moving sideways in this consolidation zone. So now it just becomes a case of how is the markets reacting in this consolidation zone, because at this moment in time, not really too much has happened since our, I suppose, run through of the price action from last week. And we're really looking for a clearer directional bias now out of this rectangle. And for that alone, I'm actually setting alerts just below, just above and below the range, just I suppose that at least that way, if we do get a breakout, we're getting informed of the impulse. And at least that way, then we're getting one step closer to a confirmed directional bias. But at this moment in time, the DAX is still very much moving sideways in comparison to the analysis from last week. All right, so that's pretty much it for the week, folks. So obviously trade safe this week. We do have RBA overnight. We do have data tomorrow. And of course, we will be back on Wednesday and Thursday for market updates before obviously the weekly close as well this week. So trade safe and take care.